Hi there, this is Steve Murray, the market chartist on behalf of forextraders.com, and we're now going into the end of the year, looking at both the Australian and New Zealand dollars in here, both against the US currency, both signaling a more bearish theme in here as we go into year end. So we had this New Zealand dollar sell off, the initial sell off in mid-November, early to mid-November, after the US presidential election result, signaling a multi-month head and shoulders topping pattern in here, also down through the trend line that comes from 2016, and more recently since the US FOMC rate hike in here, down through 69.68 and 69.48 supports to also probe at 68.93. Bigger picture threat going into year end for 68.00, maybe even as deep as 66.76. Certainly aiming down there going into early January, and maybe even much deeper targets down here as we go into the first part of Q1. Similar story in here for the Australian dollar. Australian dollar though, a multi-month, multi-peak topping structure. Again, the sell-off through the US presidential election result, down through the trend line from the beginning of 2016. And then despite the rebound into early December, another sell-off after the US FOMC rate hike in here, down through 73.06, 72.84 supports, minimally targeting 71.41, likely into year end, and potentially deeper targets down to psychological 70 level, and maybe even deeper targets here, 69.68, big figures in here as we go into January. This has been Steve Murray, the market chartist, on behalf of forextraders.com, and I wish you a great trading week and happy holidays.